Hello, Dilly. How are you?
Hello, George. I'm doing good.
Excellent, excellent. You're aware why I played the Beach Boys today?
Yeah, Brian Wilson passed away.
Yeah. It's unbelievable. I was just reading up on this. I got a few years on you, but Beach Boys started in 1961.
Really?
Yeah, 1961, 64 years ago. He was 82 years old. I'm just reading here. He had dementia and some other illnesses in recent
Oh,
years.
that's the worst.
61 years old. And by the way, we're here to listen to Adam Taggart. We have Motorhead coming later, but so we're not going to get into it too much. But you know what happens when I start talking about tribute bands? It's like it never
Oh, I
stops.
know,
So
George. You
yeah, so
love
this is
tribute
what
bands.
this is why there's a market for tribute bands because the music is so good, but the guys are either dead or they're in their 80s that
Yeah,
can't play it. So there's a market for it. I mean, this is
yeah,
some of the
there is.
and hey, we got a California dude up here. Hey, Tommy, you a Beach Boys guy? Thornton, you there? You're probably not expecting me to call on this soon.
Hey, hey, George. Of
Are
course,
you?
I'm a Beach Boys guy. I love the Beach
Yeah.
Boys.
So growing up, was that was a real thing? Because you grew up in the LA area, right, out in California.
Yeah, yeah, it
Yeah.
was. Sort of had a little indirect connection with the Wilson family because I knew the daughters and really, really, really nice people. Brian definitely was out there um, in outer space. You want to look at Dr. Landy, go right ahead. But he was nuts, but true genius, definitely.
Yeah, I mean, it's amazing that it was 1961. All right, we're gonna keep this moving because I promised Adam Taggart and Adam, I sent you Adam an invite to come on up. So or
I
push the
sent him an
button.
invite too.
Okay, good. Also, Adam, maybe you got to push the button in the lower left where it says request to speak,
Yep.
because God forbid we got to listen to Kramer talk for an hour. It's like it's gonna be too much. I love Michael, but no, Michael has to report to his research department. He's got his daughters and everything. Priorities, priorities. So I'm gonna skip the monologue. Dilly, I got so much to tell you. I went shopping today. Oh my god. Oh my
I
god.
saw
All
the
right.
shorts.
Yeah, don't worry. There's plenty more where that came from. But that we could. I'm thinking of starting a new feature in like Georgia's shopping
You
expedition
could do
every
an
week.
unboxing.
Maybe I could become an influencer.
Well,
Well,
right,
maybe.
George. So they call it like unboxing videos where you
Yeah.
go through everything, like your haul. Like you can,
Really.
yeah, yeah, you can show
So
everyone like your
old
haul.
white guy goes shopping. This would be hilarious.
Hmm.
All right. Let's just keep it going. So Michael Kramer, Kramer in the car. Are you at home or in the car, Michael?
Right now I'm at home.
All right. So ready, set, go. So Michael, I promise I'd give you first. You be the leadoff hitter before Adam. And it's been time flies around for maybe a week or I can't remember 5 6 days since you were last weighed in. So do you want to just update us, Michael? What's caught your eye? I think I retweeted a bunch of your stuff like the cost of borrowing, funding, or whatever's gone down, and that's an
Yeah.
indicator, and vol and all this stuff. So could you just, not so much the Captain Obvious stuff, but what you look pretty careful at things, and we'll get Tommy later. But what's sort of noteworthy to you right now, Michael?
Uh, well, there's trade talks are going well. We expect a deal to be soon.
Ever
So
consider being a comedian when you grow up? Go on.
one day. Um, so market finished lower today, probably because there were no positive headlines around trade. Um, but no, seriously, when you look at the funding costs, the contracts for that expire in June, the S&P total return contracts, the BTIC, today traded at a -20, which means that the funding market is basically implying that uh, these contracts are trading below what the market's anticipating the total return contracts to be at. So I went back and I looked really quickly. The last time that happened was in December of 21 and June of 22, in terms of having it trade that low in front of an expiration date. So I thought that was uh, not really sure exactly what it means, but it seemed kind of odd to me. And then, of course, the other contracts, the second month contracts, are trading down again, and they're actually trading now back to their lows that we saw right ahead of the China trade announcement agreement that was in Geneva. I find it odd that basically funding costs are collapsing again, and we have an S&P 500 trading near its all-time high. I mean, the last time we saw this really happening like this was back in the turn of the year, to the end of 24, when we saw the same thing happening, and the S&P just totally ignored it. So uh, that's got my attention quite a bit. And then, of course, realized volatility has gotten down to some pretty ridiculously low levels again. I think if you look at it, like, realized 10-day vol is down to like 6.5%. And that implies that the S&P really can't move the more than 40 basis points in either direction. Because if it does, realized vol will start going up. And so that creates a little bit of an issue for the market. Unless you're going to continue to see like this grinding motion every day higher, any sort of sudden spike is going to get volatility rising. And so that's, when you look at the two combinations, it kind of makes you scratch your head in terms of why there's so much complacency.
So as they say, Michael, like what could possibly go wrong, right? And so let me just ask you additionally ahead of, I mean, I don't try to do the short term, I leave that to you. But so once we get the expiration tomorrow, things are free to move about the cabin. So what does that tell you? Vol's likely to go up basically, or what are you saying?
Well, the expiration for the June contracts is I think next week. But more importantly, what this is telling me, or the way I'm thinking about it, is that essentially we're at a place where you can get one negative headline, or you may not get any negative headlines. You just start getting the market moving a little bit, and you could see volatility start creeping higher again. Like, in my mind, what I will try to watch is the VVIX, because if that starts moving up as the market is moving up, that's usually your best indicator that you're going to be seeing a reversal taking place.
Got it.
And that's what we're kind of at right now.
Yeah. It's interesting to hear you say that. I mean, it's, people are sick of me here repeating, trying to call the short terms a fool's errand. We'll talk to
Yeah.
Adam about that later because he interviews all the smartest guys out there, biggest names out there. But it's like I was listening to a space. I'm not going to mention names. These are smart guys talking today, all right, or yesterday, whenever it was. And even though they're smart guys, and even though they're known to be skeptical, they're all like, "Oh, you got to keep doing the Chuck Prince shuffle. As long as the trend is up, you got to stay long, even though the market's overvalued." And I'm just listening to this stuff, Michael. And it's like, I just want to go for a walk. And then they all have the idea too. Oh, well, don't worry. If the market's going to go down, you're going to see this well in advance and have plenty of time to get out, and blah blah blah. And as long as the Fed has your back and the administration has your back, everything's good. So I don't know. I don't know. It's like when they talk about valuation, Michael. Valuation tells you nothing is a timing tool. You've said that many times. It's true. But it
Yeah.
also, and as Tommy always says, it's a condition, not a trigger or whatever. It's not like, and Cantor always says, it's not like, people wake up, the market wakes up one day and says, oh, we're overvalued, we're going to go down. You need something to give it a little push, right? So, but it was telling me what you're saying is that where the setup is, God forbid, if something happens, the setup is not good. So, yeah, I'll put it another way, but common sense. I was trying to think like what stupid analogy I could come up with. And it'd be like buying an really overpriced house in a fancy neighborhood. Okay. And you say, well, there's nothing for sale. So, forget about the fact the house is up 80%. Let's say it's Palm Beach, it's up 80% since pre COVID. There's nothing for sale. But you're buying bad value, right? So you can't tell exactly how and when. Maybe it keeps going up, but that's all a matter of personal preference. If you're just a trend guy and you just process over narrative and you're not paying attention to anything else, number go up, fine, have at it. But I don't know. I don't think that's the way you roll. It's not the way I roll. And for what it's worth, and Tommy Thornton will weigh in later, like he very presently called the bomb. He did it. Oops, he did it again back in April, but he's been lighting up as well. So you got smart company there, Michael. So that's fantastic. So Michael, hang with us if you can. I know you got your research department you have to deal with. So let's get to our main event,
Sure.
our regularly scheduled programming. And just by the way, spoiler alert. Adam has, I think, a 6 o'clock hard stop. If he can get out of some obligation, he may stay longer. But not to worry, Dilly. We're not going to finish the space on time and an hour because we have Motorhead in the audience, and he was so excited today. He has a great new angle on the electric car company that shall not be named. So we got
I
to hear
saw his
this.
post.
Yeah, and everyone. And Dilly,
Hmm.
can you put Motorhead's post up in the net, please, nest,
Yeah,
please,
I'll do that for
because
sure.
this could be really this could be huge. All right. So anyway, all right. So now we come to our regularly scheduled events. The reason you're all here. I present to you Adam Taggart. Adam needs a little introduction. I'm a huge fan. He doesn't know this. Today was the first time we ever spoke. I listen to his YouTubes every week. In fact, he does like 3 or 4 a week, but I'm listening all the time. I listen to the replays. And what I like about Adam, he does a really good interview. He doesn't make it about him. He makes it about the guest. He gets a lot of the leading, the thought leaders from the industry, the biggest names out there. And biggest doesn't mean best, but he's got thoughtful guys there, and he conducts the interviews incredibly well. And he's very self-effacing and has a great bedside manner, as he says. I don't know if I can lift weights as well as he can, but we'll talk about that later. So Adam, welcome. I know space is not usually where you patrol, usually on YouTube, but welcome. How many have you done many spaces, Adam?
I could probably count the spaces I've done on one hand.
Really? Is that just coincidence, or has that been a calculated move on your part?
Honestly, it's just been bandwidth. I'd do more if I had more time, and I'm honored to be here. I'm so glad to be here. I hope I can live up to that introduction,
No,
George.
no worries, Adam. And I'm going to ask you one thing, not to be annoying, but if you're speaking, you're on a speakerphone, as I am. But could you just try to move a little bit closer to the phone because it is echoing. I'll have people DMing me complaining, oh, I can't hear Adam, blah blah blah. So help me out here, Adam. I don't want to deal with the complainers. All right, so let's get into it. So, Adam, is there anything you want to kick off with, or should I just go for it and we'll just play pickup basketball here?
No, I got a point of view to mention, but real quick, I'm not on a speakerphone,
Oh, okay,
and the
okay.
phone is like right next to my mouth.
Oh my God.
This is you're reminding me one of the reasons why I haven't done spaces is I get this feedback. I have an echo. I could try to put the phone on speaker and
Yeah,
see if
yeah,
that
yeah,
makes a
yeah, yeah.
difference.
Try that. See if it's any better. I don't know if it's any better or not. Try it.
You know what? I'm not even sure how to do that
All
on the
right, all right,
Spaces
all right.
app.
You know what? You know what? If people can't deal it, by the way, you know what? If anyone can't really hear Adam very well, if it's that annoying, raise your hand or DM me. Otherwise, if it gets to be unbearable, we'll change it. But Adam, why don't you just carry on the way you were, and we'll see what happens.
All right, we'll do. If it gets real bad, I will try to take off these headphones and just use the phone as a phone, and we'll see if that makes
So
a
I'm
difference.
reliably informed by a fellow California, Mr. Thornton, that it's fine. So until I get an ambush of people saying it's not fine, carry on, as I say.
All right, well, thank you. Well, a couple of things. First, I just want to comment on a few of the things that have been mentioned. I'm heartbroken by the news about Brian Wilson. I didn't know it, actually. You were the one to just break it to me. He was an absolute genius, huge fan of the Beach Boys and their legacy. As many folks know, they inspired the Beatles. They had a lot of back and forth in trying to, out innovate each other on albums. Pet Sounds was just a hugely influential album. It's a huge loss for the world. So, anyways, just wanted to send good vibes out there to other Beach Boys fans. And I've got two sort of quickly prepared, intro remarks. My first one's not going to be all that different from what Michael said. So, you congratulations on pulling people who see the world similarly here, George. But you would ask me, hey, is there anything you just want to sort of, stake in the ground you want to put at the beginning of your of my talk here? First and foremost, I should tell people I don't consider myself an economic expert. I am much more like your followers, George. I'm just somebody who wanted a better way to educate myself about the world of money, and ended up more or less creating the platform that I wanted to have be out there in the world. So I kind of see myself as the avatar for the average person who's just curious minded in the space. Now, if I picked up any expertise over my career here, it's probably more of being an experts of experts. As you said, I interview a number of people each week. I do pretty much 5 interviews a week now. So I do talk to a lot of smart people every week, and I do spend a fair amount of my time trying to synthesize what they tell me, and I'll do my best to concisely share that with your audience here. But I think the main message that I would give to people right now at this moment in time is, there's a growing sense of optimism right now that we've kind of made it back into the sunshine. As investors here, We didn't have a recession manifest. Stocks are now back pretty much to all-time highs. There's an expectation of better days ahead as hopefully a lot of the uncertainty that's been plaguing the market this year with trade and whatnot begins to get ticked off. And I guess all I'd say is I would caution against developing too much hubris here. I think that this year, started off as one of the more volatile years we've seen in recent history. I think that volatility is not behind us yet. I think it's going to continue from here. Sure, momentum could continue to the upside here for a little bit. So for the next month, couple months, maybe it seems like it's just blue skies ahead. But I say this while I'm actually becoming more bullish on the economy's midterm prospects than I've been in a long time. But there are just, in my opinion, too many sins of the past that still need to be dealt with here and are going to express themselves. And I'm not talking just about the previous administration. Sure, there's some elements from that, but there's some of these trends have been, many years, decades in the making. So for a whole bunch of reasons, I expect more volatility ahead. Just to list a couple that are on my radar from talking to the people I've talked to over the past week alone, it's contracting money supply. And if you are interested in learning more about that, go watch the interview I just recently did with Lacey Hunt. There are fewer, smarter living economists around than Lacey on that topic. Plunging consumer confidence. It's across all socioeconomic levels. And importantly, this time, even amongst the high-end affluent consumers who have been carrying most of the water, keeping up until now. Retail sales averages, fairly consistent, but that's starting to weaken here. I got that data from Joanne Shu. She's the one who runs the University of Michigan consumer surveys. There is highly likely to be some sort of air pocket in economic activity that we're going to experience in a quarter or two from now from all the economic activity that would have happened over the past quarter or two, but hasn't because CEOs have sat on their hands, not investing in CapEx, not investing in production, because they wanted to see how the tariff situation unfolded. I just got off really just an hour ago, George, with one of your favorite people in the world, Melody Wright. As I'm sure she's told you and your audience, the housing market is fast weakening right now. She's very, very concerned. That I think is going to be a really big shoe to drop over the next year. And then, of course, we could very well have some price shocks from the tariffs once they get finalized. It's still TBD, who knows? But that's still, a potential additional shoe to drop out there. So I could continue going through that list, but basically my main point is the odds of more economic and market downside surprises from here, I just think are too high to dismiss. So, enjoy today's, exuberance in the market. Like I said, it could continue for a little while, but I would caution people about breathing a sigh of relief saying, hey, we've made it through the dark times and it's only going to be better from here.
Very well said, Adam. Very well said. I concur virtually with everything you said. As I mentioned with you, we're talking briefly on the phone today. I'll vie with you for who can be chairman of the Melody Rate fan club. By total coincidence, it was just yesterday we had Melody in here, and it was funny because she wasn't the featured guest, but she came in, and the next thing I knew, we had half a dozen, as I called them affectionately, housing nerds, and it was like a housing fest. And oh my God, I wanted to slit my wrist. It was just one after another, and so. Yeah, no, I think that's in process, and these things have a way of they don't matter until they matter. And the other thing, Adam, here's a question for you. They say for the market and individual investors, narrative follows price. I mean, okay, it's price goes first, or I should say sentiment follows price. Excuse me, kind of the same thing, but a little bit different. I remember in my Fidelity days, the fund flows would follow the price; they would jump on the momentum. Nowadays, it seems like retail buys every day, but whatever. So you have this really puzzling dilemma where retail has just been guns blazing and they've been right. And the social community has been more circumspect. I can't find the tweet right now, but there was a great tweet a couple weeks ago. I read out a couple times. It went something like, Stan Druckenmiller was wrong. Paul Tudor Jones wrong. Point 72 was wrong. Blackstone was wrong. Fidelity was wrong. Wrong, 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 wrong. All big names. And then it goes, retail was right. Retail won. Okay. And it's true. They did. All right. And so, but we know that sentiment tends to follow price. So as you talk to people, do you sense that, we're all human? We all get kind of a little FOMO, when it starts going up, and then you want to jump out the window when it's not. So do you experience that and sense that, over time as you talk to people?
Just to be clear, what do you mean by people? Do you mean the experts that I talk to,
Yeah,
or do you mean
well,
just
yeah,
the
yeah,
average everyday investors?
yeah, particularly the experts, because everyday people, we all know that we all have the father-in-law or the guy at the club or whatever. We know about that. I'm talking about even amongst the thought leaders.
Yeah, I would say I'm painting with a really broad brush here. I would say that over the past 2 months, I have seen more people who were cautiously bearish now become more cautiously bullish. I wouldn't say that's the majority, though.
Right.
Uh, and I have seen some people who were cautiously bearish who are now becoming like really worried bearish. So I am seeing some people who are saying, "Hey, look, this is sort of like a false dawn here." And it's like the horror movie, where they're telling people like, "No, don't go in the house there; it's not safe." Um, so, to your point about sentiment following price, the way I think about it is that humans are not rational beings; we're rationalizing beings, right? We see what happens, and then we try to affix the story to it or the reason to it. And right now, you're right. Retail has prevailed. Um, in some ways, we it's so used to be calling dumb money and feeling like a patsy at the table. Maybe it's a little bit of an understandable, sense of turnaround. Retail
Yeah,
feels
Adam,
right
Adam,
now.
Adam, Adam, Adam. Just don't tell anybody. I'm only telling. I'm whispering this to you. It's no longer dumb money versus smart money. I think we honestly, with a little humility, have to say no, no. It's small money against big money. That's the
Well,
better.
that's absolutely
Yeah,
true. Yeah,
yeah.
yeah. But what's interesting is, and I don't want to take things in too much of a tangent too early here, but George, I'm guessing you're probably familiar with Michael
Of
Green from
course, of
Simplify.
course, of course.
Yeah, and one of the more explanatory frameworks that Michael has, right, is the passive capital flows. What he calls the giant mindless robot
Right.
of retail driven buying, basically buying that's done from the retirement accounts for all the people that are working for all these corporations that just has to be deployed every single month, and it's price blind, right? So that is a really powerful um, upward force, upward pressure on asset prices when you have a very large price insensitive buyer coming into the market every single month. And because of the way that those funds are allocated, they go disproportionately into a small number of stocks that happen to be the biggest stocks that drive the indices the most. So that is one really big factor here. And I've had a lot of debates with Mike and other folks about what's going to stop that. What can stop that. And I don't know if I've actually necessarily got the right answer to that, but certainly one thing that could stop that is if we obviously went into a big enough recession, or even if we just had enough layoffs that number stopped growing, and if it just even flatlined, it would start putting some real pressure on stock prices. But it is one interesting question, which is, does much else matter when you have that giant mindless robot of
Right.
passive capital flows every month,
Right.
plus corporate buybacks at the volumes that we have? It's hard, to kind of make an argument against that, why
Yep.
the market shouldn't go up,
Right.
given those two things going on.
Right. No. Very well said again. And Michael's a friend, and he's one of the brightest guys I know. What I find really annoying though is like, when does it stop? Right. And it's like, the argument makes now, it's true. It's true a year ago, 2 years ago, 3 years ago. So it doesn't give me any guidance. I mean, maybe it gives me guidance not becoming too bearish, but it doesn't tell me when I should be edging towards the door. And so that's why I find really frustrating about it. It's not his fault, but that's just the nature of the beast. And we all try to say, oh, how's this going to end? And what's the black swan? By definition, black swans you can't predict. All right.
Exactly. Yeah.
All right. So, another one is, well, get a recession like you were saying. Another one, I actually personally believe it's gonna be the opposite. I think I think, given, I think it's going to be interest rates. I know you've interviewed Michael Howell a lot. He's the liquidity king, as I've affectionately dubbed him. We used to
Yeah.
worship the altar of Bill Gross, the bond king. He's the liquidity king, and I haven't trademarked it yet, so don't front run me on that. On that, Adam. But and Kramer's still in the room. Talk about inflation and this and that. It's not even so much an inflation story. You've heard Michael, go on about the term premium and this and that, and they got the dollar going down. And like he says, we may win the trade war, we're going to lose the capital war, blah 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 blah. So $50 in double jeopardy. If you were just to like hallucinate or hypothesize, you know, hey Adam, try a 5.5% 10-year on for size. We're not talking Weimar levels, but just with respect to Lacey Hunt, okay, try on a 5.5% 10-year. Tell me if that fits you pretty well. And so that's kind of, I mean, who knows? We're just spitballing here. We're just trying to figure this out. But that's kind of the top of my worry list in terms of what things that could go wrong. Anyway, okay, so let's talk. Sorry, go
It's
ahead.
on my bingo card too. So just so you know.
Yeah, that's great. That's great. That's great. All right, let's talk a little bit. Let's not. We can get into a macro food fight later, but let's leave that aside because those are so commonplace. You bring a unique set of circumstances and experiences to the table, and I'm not going to ask you where you grew up and were you a Dodger fan. We're not going to do that nonsense, okay? But instead, I really want to know because I have some idea, but you have a different set of personal circumstances and different guests. Um, so I guess I'm going to start with maybe the most provocative question. And I think I sent you some of these earlier, and it's a line borrowed from this Hollywood producer. Last name's Goldman, I think, and I didn't make this up. I just try to parrot smart things that other people say and sound erudite. And his rallying cry was, "Does anybody know anything?" So, you talk to these smart guys or thought leaders, and look, we all know trying to predict the market's like damn near next to impossible. It embarrasses all of us. All right, and so do you find, and again, we're going to keep everyone in the federal witness protection program unless you want to call out some guys who made some great calls. I mean, again, as I was discussing with you earlier, you can praise individually, but only criticize generally. So, do you find any correlation between you know the reputation that somebody comes with, and then the first time you interview, it's oh my god, I'm getting to interview Warren Buffett or whatever. Okay, not that you've interviewed him, just using him as an example. Do you find any correlation between sort of, and it's not a good narrative. It's not what I'm talking about. There are some guys who write letters, and I wish I could write half as well as I can, but it's not predictive. It's not prescriptive. It doesn't tell you what to do. And so my question to you is, when you, yeah, I can only imagine. Yeah, there is a question. I'm sorry. This is my annoying habit. I'm trying to contextualize your answer. I find that oftentimes the best insights come from where you least expect them. And sometimes the big guys are kind of like semi-captain obvious because maybe in some cases, instead of owning their opinion owns them because they're associated with a certain point of view. And they're just going to do their some stump speech when you're talking to them. So could you riff on that a little bit? Like, what your experience has been? Again, you can keep specific names out if you want to call out some great performances, that's fine. But I'm just kind of curious what your experience has been.
Sure. There's a couple of axes that I'll look at to answer this question. Um, so the correlation is a lot looser than I think you would expect from reputation to value, right? And it can be for a variety of reasons. Sometimes somebody with a big media following does not necessarily mean there's a lot of substance there. And just to get to the more salacious part of your question, I would say by far the worst interview I ever did was I will not name names, but it's one of the biggest bulls who appears on mainstream media regularly in the financial media, and was definitely just the biggest crash and burn interview. It was like pulling teeth first, just trying to get any answers out of this individual, and everything that was offered was very superficial. There really wasn't a lot of rigor behind the answers, and so I did that early enough that it really, taught me pretty early that a fancy subscriber or follower count or the fact that they appear on, big branded shows doesn't necessarily guarantee you're going to get a great or useful interview out of it. Um, the other thing, sometimes the bigger a person's brand, especially like if they're still actively working, like they have clientele, is oftentimes they'll have clients who they have to be very sensitive about what they say because it might anger or irritate the belief set of one cohort of their clients. And so I find those people oftentimes really frustrating to talk to because they're not willing to be declarative. Right. They'll only go so far. And then when you keep pressing them to try to get a hard answer that you can use to make a decision off of, they'll pivot, they'll equivocate. And so that can be really frustrating sometimes. Every so often you stumble into a gem, and Melody is a great example of that, of somebody who just, uh, they're just dedicated to their craft. Oftentimes they're kind of toiling away, if not in obscurity, just they're so heads down, they're not out there sort of seeking fame or followers. And you stumble across these diamonds that are just gushers of, primary data or really, heavily crunched analysis that, it's like stumbling into a gold mine. And those are probably the most fun people for me to interview. But I guess I'm just wrapping up my answer here. Uh, you know, that being said, sometimes a lot of the names that you pursue the most are, some of the best and most fulfilling
Yeah.
interviews. The one that comes to mind for me was the first time that I interviewed Tom Honig,
Yep.
former what was he? I think he was former
Can,
head
Kansas City Fed Gov. Kansas City. Yep.
Kansas City
Yep.
Fed. Yeah, and then he sat on the FOMC for a number of years and famously defied Ben Bernanke. He had the longest stretch of dissents when Bernanke was trying to get universal votes on QE. And he was, so wise, so gracious with, being willing to be open and honest with us about an institution that is oftentimes cloaked in secrecy. And, was very transparent in a way that I was like, wow, he has validated a lot of my thoughts about how the Federal Reserve works. And that is frightening to me because a lot of those thoughts and opinions, were pretty critical. But he really, every time I talk to him, I just think, my gosh, I wish we could just, clone everybody at the Fed from him. If we had people like that actually leading and making the decisions at the Fed, I think this country would be in a much better position.
Yeah, I'm with you. I'm with you. This is Adam. You probably heard the line before. Never ask a question you don't know the answer to. So here we go.
Yeah.
Don't you find the mainstream financial media to be like your biggest allies in the sense that I almost feel, it's almost like in politics, people, there's a big, and we're not going to get into politics in terms of who's for this or that, but I think we all can agree, and you've talked about a lot of this in some of your various broadcasts, that there's a lot of dissatisfaction out there that people don't feel they're being fed the truth and they know something is wrong. And, a lot of people may voted for Trump not because they like him, but he's a change agent and they couldn't stand the system. The same reason a lot of people wanted to vote for Bernie Sanders and blah, 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 blah. Okay, fine. Don't you kind of think, again, wording the question, I'm not trying to railroad you, but I'll make an I statement. I'll ask you to push back. Let's do it that way. I think the reason there's such a market for the type of service you provide, or if people insist on hanging on to my calls, is because they know they're in this sort of Orwellian narrative and the system is not, it's kind of rigged, and Big Brother comes on from, I shouldn't say Blackstone. You know what I'm talking about. These big institutions, and they all read from the same playbook, and blah 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 blah. So again, talk about anything useful, anything descriptive, anything predictive or prescriptive out of these guys. It's a waste of time. They'll put it another way: if they were doing their job properly, you wouldn't have a podcast. And so, and no one will come and listen to these pieces. So I don't know. Any part of that you want to agree with, disagree with?
Oh no, I'll completely agree with it. And I will answer your question specifically about the media, but let me take a detour through the education system. So uh, what's so funny is we I think we correctly as a society value education, right? But why? And if you ask somebody, well, why do we value education? At an individual level, it's well because if I go get educated, I think I'll be better off.
Hey, Adam, you drifted away. Dilly, can you still hear him?
Well, by better off, I'll probably make more
So,
money. I'll be able to do
Adam,
things.
can you rewind 5 seconds? I think you got a phone call and you blacked out for 5 seconds on us.
Okay, yeah, I did.
No worries. Go ahead. Just rewind 5 seconds. Go ahead.
Sure, sure. So if you were to ask somebody individually, well, why do you value education? Why would you want to go get educated? They would say, well, because I'll be better off in life, I think. And if you say, okay, well, how? Most people would say, well, I'll probably earn more money and I'll be able to, afford to do the things that I want to do in life more, right? Which is all understandable. Now, I don't know about you, George, but I mean, how many classes did you have in high school or college that taught you about money?
Zero.
Financial system? Zero,
Zero.
right? Even super practical ones like here's how to manage debt. Oh, someday you're going to have to buy a house. Here's how a mortgage works. I mean, just really basic stuff like that, right? And our education system is just a complete fail on that. So what happens is, people go off in life and, they end up beginning to make some money and they start to feel really unprepared to be the stewards of the money that they're making because they rightly feel that they didn't have a really great grounding in financial literacy, right? So that's a big reason why I created, my podcast and my platform to begin with. But to your point, George, it's not just our education system doesn't teach people about this, but the mainstream alternatives they have to get smart on this, they have come to increasingly lose faith in. For a variety of reasons, at a base level, I just think what's being sold in the mainstream financial media is just not very financially nutritious. And if you talk to people who watch CNBC, most of them just feel like they're being marketed to,
Yep.
right? Like, okay, it's these short segments. They're just trying to get a soundbite.
Yep.
I'm not really learning anything useful.
Right.
I'm not understanding anything in depth. I'm not getting anything really actionable. And then the commercials come on and it's all about, BlackRock ETFs and whatnot. So no matter what happens in the market, surprise, surprise, it's always a great day to buy stocks or ETFs. And it's because their advertisers, their sponsors,
Oh yeah,
are
for sure.
so to your point, they are coming online to self-educate, to seek more
Yep.
financially nutritious content. Yeah. And as I sort of mentioned at the beginning here, again, I don't beat my chest and say, hey, look, I can give you the whole backstory. I did start my career on Wall Street. I did go get an MBA from Stanford. I did work in financial media, digital media for, a good chunk of my career. But I don't proclaim to have, the secret formula for wealth building or the,
Sure.
market beating algorithm. I really just wanted to create the type of financial media that and I think much of the world, wants to be able to benefit from.
Yep. All right, so Adam, we're gonna do speed round here a little bit, and then I want to let others ask questions. So,
Sure.
is there anything that you're willing to talk about? Again, we're gonna keep all names. We're gonna not gonna mention names, and this may be bad on you. It may not be on a guest. Is there like a really hilarious or ridiculous story you want to tell about something that a broadcast you got that really got screwed up? Because I know you record your broadcasts, so maybe it was something the public never saw. But like, did you have anything like totally absurd, or are you well enough scripted and planned out that never happens to you?
I would say I'm sure there are probably some embarrassing stories if given enough time I could think about on my podcast, but I got to say I kind of feel like I'm at, the Malcolm Gladwell, Blink, he had 10,000
Sure.
hours.
Yep.
I kind of feel like I'm getting close to my 10,000 hours now where it's just, I kind of lock in and things go, relatively smoothly. And if a curveball comes, I've seen it before. I'll tell you guys a funny story though, of a similar vein, which is, are you familiar with Robert Kiyosaki?
Oh, for sure. It's like he keeps his spiel is you got to borrow billions and billions and billions because if you owe the bank a ton of money, it's all good or something like that. Yeah, I know of him. Yes.
Yeah, so I've actually got a lot of really funny Robert Kiyosaki stories. But early on in my financial media career, I was invited by Robert out to one of his conferences and thought I was going to talk at it for about 30 minutes. And he pulled me on stage when I walked in, and I didn't leave for about 3 days.
Oh, what happened? What happened?
That's a funny story in itself, but it's not as funny as the one I want to tell you
All right,
here.
go ahead. No, we'll go. Yeah. All right. So go into your comedian role. All right, go. Maybe crack us up. Go for it, man.
Okay, so let's manage expectations here. But fast forward a couple years after I met Robert, I was speaking down. One of his like the guy that ran Rich Dad South America invited me down to speak in Peru. And coincidentally, Robert was speaking around that same time in another country in South America. Heard I was there with this guy and said, "Oh yeah, I'll come see you because I've got an event there too. He wants me to speak at." So Robert came to my event and then said, "Hey, why don't you come to my event? It's later on this night." So I said, "Great." So drove there with Robert, and my event probably had, I don't know, 50 people there, or whatever. Driving with Robert to this other event that he's speaking at, uh, we're about a half mile out, and I start seeing the searchlights, in the sky. And then there's this massive coliseum. We pull into the back where it's doing like evasive maneuvers, like trying to shake the paparazzi and stuff. We get in the back. It is packed. I mean, I'd probably 5 to 10,000 people just packed into the stadium. And I'm in the green room with Robert. I'm like, wow, Robert, this is pretty amazing. I got to hand it to you. You're a real celebrity down here. And he's just taking it all in. And they come up to him and say, "Okay, Mr. Kiyosaki, it's time to come on stage." So he gets up and I said, "All right, Robert, well, look, we'll have dinner when you're done. Good luck. I'll watch the show." And he says, "No, no, no, no. I want you to come up on stage with me." And I'm like, "What?" And he's like, "Yeah, yeah, yeah." So he pulls me with him. He goes up on stage, and this is in Peru, right? So everybody speaks Spanish, so which I do not. And so Robert's on stage for 30 seconds, and the guy's introducing him, and ladies and gentlemen, Robert Kiyosaki, and the place just deafening roar. Robert talks for about 2 seconds and says, "And I want to bring my friend Adam Taggart up here."
No.
I get pushed up on stage with him, just thousands and thousands of people in this Coliseum. It's like an NFL football game where they have those those cameras on the guy wires that are flying all around the place, right? It's just crazy. So, mind you, I don't know where I am. I don't know what this talk is about. I have no idea what these people are expecting to hear. So Robert starts his pitch, and the stage has like a catwalk. So Robert starts walking out on the catwalk, and as he does, I can't hear his audio anymore. So he's talking, saying something I can't hear. And then he pauses and he turns around and he says, "Well, what do you think, Adam?"
Oh no.
So, I mean, this is like people's worst nightmare, right? You're on stage in front of thousands. You have to give some sort of, presentation or performance, and you got no clue what's going on. So, it's blocked out in my mind. I can't even remember what I started to say. But throughout the night, I began realizing these people were part of some like multi-level marketing type organization that was all about take control of your financial destiny by being an entrepreneur. And I could kind of start speaking to that.
Yeah, Adam, keep going. Sorry, go ahead.
No, I'm done. I mean, this was just, it was like a living nightmare that somehow I just, faked my way through it. But probably everything else after that has been a breeze.
Oh my God. That really, that takes the cake. All right, Adam, I got plenty more questions, but I want to work the audience in here. So first, we're going to go to Joe, who's next to you, who's a good friend, one of the smartest guys in the room. I just want to let you know, Adam, you are surrounded to your left and to your right by Bitcoin people. So just know that, okay? And then we're going to go to, I think Van Drunken Miller got sober for a little bit. So maybe Van, you could talk just for a couple minutes because we want to hear about Tesla. But Van hasn't been seen for a while. He's had a real problem lately, but I think he's dried out. He can talk for a couple minutes. But Van, just hang on. So first we're going to go to Joe. Joe, the floor is yours. Please unmute yourself.
Yeah, thanks, George. And Adam, thanks for coming up. I'll just state at the outset, for the times that I've given you too much grief or been too hard on you, I apologize for those. I know I have in the past, but I do have a genuine question. I do actually listen to quite a bit of your podcasts. And, my first sort of observation is that there tends to be an exorbitant amount of folks that are what I would call unreasonably bearish. And I won't name any names, but I'm sure you recognize some of them. There are people that have been on the podcast repeatedly that have been, completely misdiagnosing the economy and markets for really some cases better part of a decade. And I guess my question to you, as much as we have a mutual dislike, I think, for the bubble vision, the CNBC, the always bull crowd, my frustration with some of the alternative financial Twitter and media is they perceive, at least as I perceive it, they tend to go to the complete opposite direction. They completely engage in clickbait. They have doomerish headlines that, again, have persisting for, trying to get clicks and impressions, et cetera. And I guess my question to you is, what steps do you take trying to be objective as a journalist, as someone in the alternative financial space, to try to balance that and not to promote clickbaity titles that can make retail investors make a lot of poor decisions. And I'll just share one final anecdote. I had a client who sold all of their stocks in 2022, and they specifically cited to me listening to some of the episodes of your podcast and some of, not your views, but the expert views that came on. So, I'll just quote, George's mentor, Peter Lynch, just to conclude here, that I think a lot of money, far more money, has been lost waiting for the next correction, than the actual correction itself, because you're preparing for it, and I'm paraphrasing, but you're effectively, anticipating some big collapse that never materializes income. So I appreciate your views on any and all of that. Thank you.
Thank you, Joe.
All right, I appreciate the question, Joe. So let me tackle the headline part first. Uh, it is challenging. So there's definitely a line of selling fear, or selling unfounded euphoria too, because there are certainly channels that do that as well. And I think as a responsible media, professional, you do not want to cross that line. The challenge you have in the social media space, but in any media space, is limited space. I mean, oftentimes you've got 3 to 4 words, maybe a little bit longer from that in your title, but certainly in your thumbnail, 3 to 4 words max, to try to both convey what an interview is about, but also make it interesting enough that people are going to watch it. And it's an art, it's not a science, and it's something that is hard to get exactly right all the time. So it is an ongoing process and a challenge. You probably know from my videos, Joe, I start them with a little preview, 30-second clip or so of kind of the meat or the heart of what the conversation is going to be about. And the metric I try to hold myself to is, can somebody look at the title and then watch that clip and feel like it's an authentic summation of what that clip is about, and therefore what the larger interview is about. So as long as that is true, I feel pretty good about it. If I was to put out a title that said something like, the world's going to end, and then the video, the material of the video really didn't match up with that. Well, first off, I wouldn't say the world's going to end, because I would call that selling fear. But if I said something like, should we sell this rally, question mark, and then the intro was kind of the heart of the person's argument for why they're dubious of the current stock market rally, and then the video was a very nuanced discussion about that, I would feel that would be very fair, right? So you do just have a challenge as a marketer of your media to try to come up with accurate, interesting, yet emotionally, evocative enough titles that you're going to get people to watch it. And that's just the nature of the beast of being in media. To your point about the type of talent that comes on the channel, first off, not everybody's going to get everything right. And, George even asked the question earlier, does anybody really know anything? Right? Nobody has a crystal ball. That being said, I do interview a lot of people, and given enough time, there are people that I have not invited back on the program because I felt like their frameworks really just didn't map to what I would consider to be, a thoughtful discourse on where things could go. I'm fine if somebody has a data-driven, well-rationalized argument that proves out not to map to what happens in the future, because we're all talking about probabilities. You're not going to be right 100% of the time. But I find if somebody is taking a very a very confident position, but they're consistently not arguing it in a way that shows a methodology that makes sense and can be applied to other economic situations going forward, then I begin to feel like that person is A, not very valuable to listen to, and B, they're probably selling a point of view versus providing an authentic presentation of their analysis. So I think, I guess those are the things that I look at. And look, I don't bring anybody on to to be the expert of everything. What I try to do is bring people on who I think have an important piece to contribute to the overall macro puzzle. And a great example of that would be like a Melody Wright. You know, she doesn't necessarily have a strong sense of what's going to happen with the financial markets, but she knows what's going to happen to housing, and housing is an input that influences a lot of things. Joanne Shu from the University of Michigan, you know, again, she's not a market prognosticator. I'm not going to push her on that, but she knows a lot about consumer sentiment, and that's what
Right.
that's an important input. So I try to bring in people who I think have one or more important pieces of the puzzle. And one thing I don't do, just to be clear, I understand why people will look at the people that come on my channel and say, "Boy, Adam, you got a lot of bears on your channel." Um, I do not select. I do not select for bearish people. What I try to select for are people who I think have those puzzle pieces, but importantly, people that have a data-driven framework for their analysis. I don't ask them about it beforehand. When they come on the channel, I don't know what they're going to say. I basically just give them, you know, the spotlight and try to bring out as much of them as possible. Now, more often than not, these people have been more pessimistic. Now, there's been a lot of reasons for people to be pessimistic, and I'll tell you, in September or October of 2022, almost everybody was pessimistic. You know, the people who flipped bearish early, like Michael Howell and Darius Dale, huge props to them. But to your client who sold a lot of their money in 2022, you know, if there was somebody to listen to on my channel that influenced that decision, I mean, I guess that's the reality of the situation. But that was the majority of everybody,
Yeah.
not
So,
just on
so
my
yeah.
channel, but in the world.
Yes, so Adam, I have to interrupt you. I mean, I'll let Joe have a comeback. I want to say a couple things, and then Joe, and then we're gonna go to Van Drunken Miller. Van is sober for a couple of minutes here. So, Adam, a couple things. I kind of developed a real following on Spaces in 22 because I was a Pied Piper of the Bear Camp, and that's I got a lot of followers. But I've been very public about this. I started an ETF and it went off the rails, and I was too bearish too long. And one of this, it's all me. It's on me, okay. But here's the other thing too. It's like people tend to you can climb into an echo chamber if you're not careful. And unknowingly, I did that, and I deeply regret it. I paid the price for it. But going back to one of the points that Joe asked you about, and you know this because I know this. I've done some YouTubes myself, and there's a balancing act between big names and small names. There's a balancing act between clickbait and non-clickbait. I mean, I had someone on. I'm not going to mention names. It's not important. A very thoughtful guy. He came on shortly after the election, and he's very data driven. Very data driven. Okay, and his conclusion was like there wasn't a whole lot of change, at least the way he looked at it, his market view, because Trump had gotten elected. All right. So basically, nothing to see here, move along. All right. Whether that's right or wrong is not the point. The point is, Michael Kramer and I, we were doing these YouTubes together. And it's like, okay, let's make a thumbnail that matches what the guy said. So it's like, and we gave it to one of these artist guys, and he listened to it and put it through some AI thing or whatever. And it came out something like, Joe Jones says market look unchanged. Market outlook unchanged. Like, who's going to listen to that? So so Joe, you're right. I mean, but it's you got to try to balance things out. You don't want to be doom and gloomer, but they'll tell you've got to try to catch people's attention. You only have whether it's a visual thing, you see a thumbnail, or Adam, you know this from the clips you stick on at the front of your YouTubes. You can't just have someone drone on. Oh, hi, my name is my name is Warren Buffett, and I grew up in Omaha. Blah, blah. No, you got that open. It's the blink thing you were talking before about with Malcolm Gladwell. So it's a balancing act. There's no right or wrong answer. But Joe, you're totally right. There are a lot of doomer headlines out there, and so Adam, I'm not going to let you respond to that.
Well,
But
actually, if you don't mind, let me just
yeah,
add two quick things to this. So
yep,
one is, you know, there certainly is a line, and I think any responsible person said earlier would do their best not to cross it. But you'll see channels out there where not only is it the most humorous headline you can think of, but they're adding visuals like flames and nuclear, bomb explosions and stuff like that, right? So they're definitely, there definitely is a way not. Again, there's a way you don't ever want to be associated in doing this. And like I said, I just try to keep the authentic path. There are some really big names too that would definitely drive views on my channel who I don't have on the channel. I've refused to have them on the channel. I'm not going to name the names, but it wouldn't take your audience very long, I think, to suss them out. And it's because I literally think they're more fear merchant than they are
yeah.
a serious, constructive folks. The other last thing I'll say is it's actually harder to get like notable bulls to come on the channel. So, I am cognizant that sometimes people just say like, wow, I'm looking at your guests and the majority of them seem to have a lot of concerns about the future. So I've actually gone out and, I would say at least once a month, I go out of my way to try to identify, people that are really known for being much more bullish and trying to get them on the channel. And I'll tell you, it's a lot harder to get these
Yeah,
people.
Adam, why is it? They're afraid to admit it, or they just don't need it, or it's their belief they don't have to convince anybody. Like, why is it hard to get them?
It's a really good question. And I think it's kind of a mix. But for whatever reason, they just I'm not saying all of them because again, I'm trying to find people who have a data driven process that they feel comfortable defending. But not all of these kind of uber bull guys have, I think, a solid framework, and it's really more of a point of view. And I think they don't want to come on and have me kind of scratch and try to drill into their framework and then feel like, there's
Yeah,
actually not a
no, I
lot
got
there
it.
there.
All right, it makes sense. All right, Joe, you got a quick follow up, and then I want to go
Yeah,
to
my
I
only
want to go to Van.
quick follow up is as you know on the bubble vision, right? There's people that just smash buy buttons and just try to get you to buy anything under the sun, right? There's not much analytical rigor in that. And then with respect to a lot of the bears, and I'm not saying this, it applies to everyone, but a lot of them, prominent FinTwit accounts. They sell services, they sell subscriptions, they sell newsletters, right? So they have to in some way justify. They can't make money from just saying buy and hold the index, right? Which I'm not saying it's a good strategy. I'm just saying there's a profit incentive for them to explain why they have cooked up the correct
Yeah,
analysis of the market. So I think there's a little bit of a bias on both ends, and I appreciate your efforts to sort of counter that. So thank you.
yeah, yeah.
No worries, Joe. And look, I think this is a process. Like I said, it's more, it's heavily an art, right? So uh, you navigate by market feedback, right? So hearing from people like you, where you think we've gotten too close to a certain line, it's very helpful. I might not agree every time, but it's
Yeah.
something that makes me look and say, am I calibrating correctly?
Yeah. So thanks for that, Joe. Thank you, Adam. So, Adam, this is your first time in this space. So, I mean, the people that come in here, you wouldn't believe. We have one of the most talented, outspoken Tesla characters. I'll speak it when you're done. But I don't think you've ever had Stan Druckenmiller on your channel. Well, we have the next best thing. He's to your right now. We have Van Drunkenmiller. Van, I think, has sobered up a little bit. We haven't seen him for a week or so. Like we've been worried about him. But Van, you're back. I'm so good you're here. What's going on, man, Van?
George, thanks for having me. I thought this was a bar tab intervention, but I guess we're going to talk markets. I'm, sorry I was gone. I got caught in a liquidity trap, and by liquidity trap, I mean there was this little bar in Tulum. If you don't know where that is, it's on the Yucatan, and it's got these beautiful beaches, and it's just got enough Wi-Fi to blow up your trading account. But I got caught in the hammock after 3 margaritas, and I couldn't find my way out of it for a week. So I
So,
was
so,
just trying
so,
to.
so Van, are you okay? Like, I know the last time you fat figured something like I think you wanted to buy like 100,000 of IBM and you bought like 1 million, but you wound up making like a couple $100 million and like it just went off the rails. So, like, Van, are you okay, or did you mess yourself up here, man?
Well, I'm trying to get caught up on some news, and I'll talk about the stuff in China here in a second. But I was hungry after being hungover, and I saw that Papa John's was trending, and I wanted to order a pizza, and I meant to buy PZZA, but I accidentally ended up buying some shady NFT called Papa Wands. It's a blockchain empanadas. And so now I own 600 JPEGs and 0 slices. So I'm trying to figure out what to do. I think I'm going to stake my Papa Wands NFTs for some passive losses, and then I'll bundle them into a DAO and rug myself and report it to my accountant, and I'll call it vertical integration. So
There you go. There, it's part of your strategy. You can't win them all. So, anyway, so Van, what's going on with China, man? It's like Trump keeps negotiating in public, bidding against themselves. Like no, I can't believe any the market even cares anymore. But what's your take on all? And by the way, has Scotty called you late at night to tell you what the real deal is?
you know, like I said, I've been trying to ignore his calls. I'm actually at a wine tasting event over near the Willamette Valley, so I'll see if I can stay coherent enough to match the cohesiveness of the China deal coming out of London. Is it 10%? Is it 20? Is it 50? I haven't been this confused since I accidentally shorted my own brokerage account, but I guess let's pretend I know what I'm doing here. So, there's no new terms, there's no new progress. It's just a group hug for failure. And it made me think of looking at the valuations today. The valuations, they're so high. The S&P is more inflated than my confidence after 3 bourbons and a wink at the speed dating table at the 55 and over community pool party. You probably remember, George, I famously turned pretty bearish before the 2008 financial crisis. I cut my risk and I rotated defensively, saying, the mistake I made was not being bearish enough. I didn't think we'd have a financial collapse. I underperformed because I didn't take enough advantage of what I saw coming. So, it reminded me, I decided not to short the market, but I went all in on Bear Stearns commemorative mugs on eBay. I thought I was front running a Fed bailout to slash collectibles. And I even brought some Countrywide mortgage coasters. I figured they'd soak up the losses. My thesis was simple. If everyone's going under, might as well sell some memorabilia when it's over.